I think silver is going to rip here. I think silver is going to go. So if you had money and you want to capture the short-term move, I'd have some money allocated to silver for sure. Copper looks really good too, but I think silver is going to move more. So I think we're going to break out of this and then maybe do a retest on top of it at some point. So I don't know how fast this is going to run. I think it could break out. Maybe we go $60 pretty quick, $70, $80, $90. And we could shoot up there. I mean, it could happen very rapidly. It could happen this year even.
Silver is no longer hiding in the shadows of the commodity space. It's stepping into the spotlight as potentially the most undervalued and explosive asset class on the board. Andy from Finding Value Finance believes that silver is preparing for a breakout that could redefine how investors view tangible assets in this new economic cycle. With technical formations completing and macroeconomic conditions aligning perfectly, the stage is set for a move that may take silver from current levels to $60, $70, or even $90 in a surprisingly short period. It could happen fast, Andy warns, and possibly this year. At the core of Andy's conviction is a long-term cup and handle formation that has matured over several years. This is no minor pattern. It's a central base that typically precedes a massive upside when finally triggered. And that trigger, Andy explains, is already underway. Interest rates are rising, fiscal discipline is absent, and the monetary backdrop is breaking down. In this environment, silver, historically responsive to rising rates, tends to surge as capital rotates out of bloated paper assets into tangible stores of value. What makes silver even more compelling is its dual nature, part industrial metal, part monetary hedge. That gives it more demand-side stability than many other commodities. And the breakout isn't happening in isolation. Other assets like copper, platinum, and rare earth echo the same structure, basing, breaking out, and running higher. This is confluence, Andy says, referring to the synchronized move across the commodity complex. Importantly, Andy highlights that silver's current price has only been exceeded briefly at any point in the last 40 years. That means there's little overhead resistance to hold it back, making the path upward much easier once momentum picks up. For long-term investors, the risk-reward is heavily tilted toward the upside. For short-term traders, the setup offers a rare asymmetric opportunity, tight stop-loss, massive upside potential. This isn't a drill, Andy emphasizes. When silver goes, it tends to go hard. With bond markets weakening and inflation quietly sticking around, the time to get positioned may be now, not later. Now, we present the key technical insights from Andy's analysis. Before we continue, please subscribe to our channel and click the bell icon to stay ahead of these significant shifts. Thank you, and enjoy the video.
A lot of people are very bullish on silver. This is the silver price basically underneath interest rates. And you can see some pretty good correlations here between interest rates and silver price. So we had a big, huge, gigantic bull market in silver. Yeah, I'm not using gold because gold was held fixed for a period of time here. I'm using silver because it was freely floating for price. So bull market in yields, bull market in silver. We had a consolidation here of silver in that cup and handle. That's what everyone's talking about. That is consolidation. Consolidation occurs when you meet unfavorable market conditions for whatever asset. This was unfavorable market conditions. This is a declining interest rate environment. And now we are going to break in silver with interest rates going up. This is going to be a big, big bull market. So switching to silver itself and looking at these bigger pattern structures. There's your big pattern. We get these double bottoms. So you get a downtrend, you get a double bottom, and then the break. It can be an inverted shoulder, head shoulder here too. But you get these breaks and they go into large uptrend moves. Here's another double bottom. So you get a squeeze into a corner. You get a big double bottom. You run on up. We hit resistance. We have another squeeze here into a double bottom. And now we're running higher. That's a consolidation pattern there. And we are on fire now. We're starting to break all this stuff. So what we've got going on is when these big patterns break and the market conditions are conducive, that's what I set up with the 10-year. That was a market condition and a cycle. There's obviously some other things in the background like fiscal deficit spending and all this, the debt to GDP. There is a lot of that stuff also behind us, which I think is all part of the big cycle. But when these big patterns break, this cup and handle here, it's going to run. Generally, they run quite substantially. So this is a time to not get too, you're not trading the past 40 years. That market condition it's gone. We're in a new market condition. This is a good time to be looking at buy and hold strategies for what I think could be a very big bull market. We're also seeing confluence, which is a bunch of different information the other commodities have that are agreeing with these big moves. So big chart pattern. This is the big consolidation, big move. I think that we are basically like here. If we were to look backwards, I think this is coming. Now, is it going to be 40 years? I don't know if it's going to be that long, but I think we're just breaking out of the consolidation and we have a long run ahead of us. So it doesn't mean we'll go straight up. We could go straight up for a period of time, like breaking out of the big structure, and then we'll probably consolidate on top of the structure. But yes, we're still cheap. We still have a long runway, and all the ratios suggest that we are cheap as well. Like the gold to silver ratio is still incredibly cheap. So yes, we have a long way to go. Gold right now is consolidating. It's in the very short term. You can see the consolidation. Whenever you get these resistance points, you can consolidate. I think that gold's going to break out to the upside again, and we're going to continue to run. I'm not going to say that it's going to happen, immediately, but whenever we break through this resistance line, I think we're going to run again. So I'm in the camp that we have a long way to go in all of the metals. Now, I don't know, like, I'll put it this way. I'm very confident in the long-term interest rates going up, gold going up, silver going up. That's where I have the most confidence. In the shorter time frames, when you get these big runs like this, there is the possibility that we can consolidate longer. And I can't tell you with precision in the very short term if that consolidation is started or if we're going to break through this, which my guess is that we're going to break through it, but that's only a guess. Longer term, higher, shorter term, since we've already run a whole bunch, we could consolidate longer. That is a possibility. Silver looks like it's ready to just go on fire, like it's ready to go. So if I were to choose an asset class, I'd rather go towards silver because at the 100-to-1 ratio when it was, some months back, that's when you should have been buying the crap out of it. That's really when it was. And gold is our leader, silver's lagged. It's about to go. So that's where I would really place money would be in silver or even something like platinum. But yeah, gold looks good. If I truly believe that we are starting a new move, the last move that occurred from this breakout, which I think could be a similar thing, is 9,285%. And that was over a very long period, though. That was over,
Right.
a little less than 40 years. But I could still have maybe 40 years left on this earth if this were to play out similarly, which I don't know. But that's what I think is coming. And even if I were to shrink the time frame, this was still 560%. At the beginning of the other bull market of 1968. So I don't know how fast this is going to run. I think it could break out. Maybe we go $60 pretty quick, $70, $80, $90, and we could shoot up there. It could happen very rapidly. It could happen this year even.
When you examine the charts, Andy sees one clear message. Silver is no longer consolidating. It's breaking out. A massive cup and handle has formed over several years, and that handle has now given way to strength. This is being reinforced by a large double-bottom structure, a pattern that often launches powerful new trends. We've seen this before, Andy explains. When silver sets up like this, it doesn't crawl higher, it leaps. From a broader market perspective, this isn't just about silver supply and demand. It's about the denominator, the dollar. Andy stresses that what's being revealed here is the slow collapse of fiat purchasing power. As fiscal deficits balloon and the bond market begins to reject new issuance, the genuine inflationary impulse is moving into hard assets. Silver is simply responding to this monetary decay. What's even more telling is the behavior of silver juniors. These smaller miners, susceptible to silver's price action, have started to outperform the metal itself. That shift from metal to equity performance is a hallmark of a new bull market beginning, and we're seeing identical technical setups across rare earths, lithium, and even base metals like copper. The message is clear. This is not a fluke or a rally in isolation. It's a rotation. Andy encourages investors to avoid short-term noise and focus on structure. Patterns don't lie, and right now, they're telling us a new era is beginning. Let's get back to the interview.
I think we're going to break out of this, and then maybe do a retest on top of it at some point. So I'm trying to mentally prepare all the viewers for what could occur in the future. I don't know with 100% certainty that it's going to occur, but I'm just trying to mentally prepare people, if you're in it for the long haul, where we could get out of this pattern and we may consolidate after or come back. So get ready for that. So it's like this initial surge here out of the pattern, and then we consolidated for a long time on top. So it's going to be something similar to that I think is going to occur. The bond market, interest rates going up, the unwillingness for them to buy bonds, they're shifting their preference to buying commodities. You're exactly right, Danny. And a lot of people look at this like supply demand, and that's all they think about is supply demand. How are people going to afford $500 a barrel oil? I don't believe it. I look at it like all of these charts, they're all moving in sync. This isn't supply demand with the respect that people think. This is dollar, the denominator that this is being priced in. This is all dollar movements. So think of demand as money printing and the value of the dollar. So when you look at these charts, you're not charting silver per se perfectly. There is obviously that dynamic is in it.
Mm-hmm.
It's silver. You've got oil. You've got all these different things. This is more like the dollar is going to get wiped, is what I see, and it impacts commodities across the board. So it's not demand like you are thinking 40 years ago, like the past 40 years in a declining interest rate environment. This is like people are wanting hard assets to get the heck out of financial assets. Like it's a different thought. This isn't necessarily the demand of oil for the respect of people buying it and using it. This is like, how can I preserve purchasing power? Get me out of anything. I'll buy whatever I can of commodities. That's kind of the mindset that I think is going to be adopted in the future. If you're trying to play the shorter term, because this is a lot of people have different time frames. I'm a long-term guy. I look at long-term time frames. Hardly anyone is me. I don't know why. I take advantage of long-term time frames, and I take advantage of the short-term time frame mindset. So I'm buying cheap assets when everybody hates it. The firing order, I think silver is going to rip here. I think silver is going to go. So if you had money and you want to capture the short-term move, I'd have some money allocated to silver for sure. Copper looks really good too, but I think silver is going to move more. So I think I'd have a larger allocation into, say, silver and the equities, and then I would have platinum as well because that's broken out. Those two, I think, they'll run here. And then you have to figure out kind of your risk profile, like how much risk do I want to put on here? Given silver and its location of where it's breaking, I would take on more risk than what I would normally would because of the location of where silver is located. So this is your SILJ, which is an ETF of juniors, versus silver, the commodity itself. And this is just starting to break out. Like, this is ridiculous. So if I were to allocate, I'd take the risk and get stuff that's low. In fact, I've already purchased a lot down here and down here because some of the charts in the silver juniors were bottoming at that time. They're already up multiple hundreds of percents off their bottom, 300, 400% increases just from a year or two ago that I have realized in some positions, not all of them, but some. So the ones that are still down are the ones that I'd be highly interested in allocating a part of that $100,000. I would have allocated some to the PGM miners some months ago is what I would have done, or maybe even a year ago, which I did do. So that's where I'd have some allocation. I would buy stuff that's down and cheap. Their rare earth metals are incredibly cheap right now, and we can look at that real quick. This is Van Eck Rare Earth Strategic Metals ETF. It's down, and you got these bottoms here. I would be a buyer right now on it. That's what I would be buying. Rare earth metals, and I have an allocation to it as this is putting in a double bottom. You can kind of run that up. It's kind of a falling wedge into that double bottom pattern, and we're going to start to break out. So I would have some allocation to this. It is very, very cheap. This is probably one of the cheapest sectors across all the other different sectors. I'd have some allocation to lithium. Lithium and rare earth, they share a lot of the companies, but lithium looks good. I think that oil, people are too bearish on oil right now, and the ratio is at a ridiculously low level, so I'd have an allocation there. So really, my 100 grand, I would spend it across the commodity complex right now. I would include companies like steel and iron ore because they have big moves to the upside. I'd buy coal, I'd buy oil, I'd buy rare earth metals. I'd have some silver junior equities and some physical metals in both silver and platinum. Uranium looks good, but I don't know if I would allocate as much because these opportunities are ridiculous. And the risk reward entry points are so good where we're located here. So I'd have an allocation to uranium too, but I don't know if I'd make it as big. I know that might go counter to some people, but yeah, that's kind of how I would run it. I'd run it across crude oil, coal, crude oil. I'm including natural gas, and I'd buy across the board right now all these different assets.
Don't miss this moment. Whether it's silver, platinum, or rare earth, the opportunity lies in buying assets that are breaking out of historic bases while still underpriced and under-owned. He's already heavily positioned across these markets, and for good reason. The charts are screaming go, and the macro backdrop is finally catching up. This is not the same market as the past 4 decades, Andy asserts. We've entered a new paradigm where commodities lead and financial assets fall behind. That shift is visible in interest rates, capital flows, and investor sentiment. With silver now in breakout mode, gold consolidating just below key levels, and other commodities flashing green, this may be the last clean entry before a fast and furious repricing. The message for viewers is clear: get positioned. Don't let recency bias keep you stuck in yesterday's market. The rotation is on, and silver is just the beginning. So what's your outlook? Do you see silver shooting past $60 in the coming months? Is this the start of a commodity supercycle? Share your thoughts in the comments below. If you found this analysis valuable, please like this video, subscribe to the channel, and turn on notifications so you never miss a critical update. See you in the next one.